Welcome to this deep dive. Today we're exploring the relationship between the expansion of the M2 money supply and the price of Bitcoin.
Yes, we've looked at quite a few sources to really unpack this link, which, has definitely captured a lot of global interest.
Right, and our goal here is to understand why Bitcoin seems to, well, gain value when there's more money sloshing around in the system.
It's certainly intriguing to look at Bitcoin, which is still a relatively new kind of financial asset, and see how it reacts to these more traditional macroeconomic forces.
Okay, so let's start with the basics then. What exactly is the M2 money supply and what's its main job, economically speaking?
Sure. So M2 is basically a measure of the total economic liquidity. It includes things like physical cash, checking account deposits, savings accounts, and smaller time deposits.
So it's a broad measure of money available for spending.
Precisely. Its core function is to quantify the money supply that's readily available for spending within an economy. An increase in M2 usually signals an expansionary monetary policy by central banks.
And that brings us to a really key point. Over the last decade or so, people have noticed this apparent correlation between M2 growth and Bitcoin's price movements. Could you elaborate on that connection?
Certainly. When monetary authorities decide to increase the amount of money circulating, maybe through things like buying government debt or lowering interest rates, it can create a perception, a worry really, that the value of traditional fiat money might decrease.
Because of potential inflation.
Exactly. Potential inflationary pressures.
Hmm.
If there's more money chasing roughly the same amount of goods and services, each unit of currency might buy less.
Okay, so what does that perception, that worry, mean for an asset like Bitcoin?
Well, this potential shift in how people value conventional money encourages some investors to look for alternatives, assets they believe might be less susceptible to losing value.
And Bitcoin fits that bill for some?
For some, yes. Bitcoin, with its programmed finite supply and its decentralized structure, presents itself as an attractive option in that kind of scenario. Think about it increasing money supply versus a relatively fixed supply asset.
Right, the scarcity argument.
That's a big part of it. It raises concerns about purchasing power for fiat currencies.
Can you give us any specific historical examples that kind of illustrate this dynamic in action?
Yeah, the global health crisis starting in 2020 is a pretty stark example. During that period, many central banks around the world enacted really significant monetary expansion measures. Stimulus packages, quantitative easing.
Trying to cushion the economic blow from the pandemic?
Exactly. And at the same time, we saw Bitcoin's price experience well, a very substantial increase. The sheer scale of that monetary expansion, combined with the market sentiment at the time, seemed to significantly boost its valuation.
Hmm. So this leads us straight into the idea of Bitcoin as a potential store of value. Is that an accurate label, do you think?
It's certainly a narrative that's gaining traction. The hard cap on Bitcoin's issuance fixed at 21 million coins is a stark contrast to the ability of central banks to theoretically expand fiat money supply indefinitely.
So that's scarcity plus decentralization.
Right, those qualities, proponents argue, could give it store of value characteristics, protecting against inflation and currency devaluation. You can maybe compare Bitcoin's scarcity to a rare collectible versus the potential abundance of traditional currencies.
But, and this seems important, we have to acknowledge this relationship isn't necessarily direct cause and effect, correct?
Absolutely crucial point. It's vital to understand that the observed correlation doesn't automatically establish a one-way causal link. Bitcoin's price is influenced by a whole host of factors.
Such as?
Oh, market speculation, definitely. Institutional adoption plays a big role now. Then there's the regulatory landscape, which is always evolving, and just general investor sentiment, risk appetite. M2 is just one piece of a much larger puzzle.
Okay. So distilling down what we've seen in the sources, the main takeaway seems to be that M2 growth can act as a significant catalyst or contributing factor in the valuation of crypto assets, especially when there's broader macroeconomic uncertainty.
That sums it up well. It acts as a relevant factor, particularly in uncertain times. And this whole phenomenon also, I think, prompts us to reflect on maybe a deeper shift.
A shift in what?
A shift in how we conceive of value itself, the trust we place in traditional financial institutions, and maybe a growing desire for more individual control over financial resources.
Interesting. So wrapping up this deep dive, we've seen there's a significant connection often observed between monetary expansion tracked by M2 and Bitcoin's appreciation, particularly during periods of economic instability.
Yes, a connection worth paying attention to. even with the caveats about causation.
Which leaves a final thought for our listeners. How might understanding this interplay between traditional monetary policy and digital assets influence your own future financial decisions and perhaps your view of the broader economic system?
A question worth pondering.
Indeed. Thanks for joining us for this analysis.